Okay, we should be good here in a second. Let's see. Do. All right, cool deal. What's up? What's up? What's up, peeps? What's up? All right, let's get this going. 1 second. Let me get all this pulled up. Crazy morning. Crazy morning, huh? Cool deal. All right, let me double check this. Let me double check that. Okay, we're good. Yeah, so crazy morning, right? We saw Bitcoin temporarily push under $40,000. That has, of course, led a lot of people to be a little bit nervous, a little bit worried. But of course, I'm here to kind of just give my opinion on what I think is going on, how I think this is going to shake out, and all that good stuff. So let's give it a sec. I'm gonna give it maybe another minute or so before we kind of get into it, and then we're gonna get this thing started. I hope you guys are excited. So, alrighty, and I think we should be all good. Let's see. Notification? Did notifications go out? They should have. Yeah, there we go. Okay, cool. Sweet. So, what are we seeing right now? Well, we are seeing, of course, let me get the charts pulled up now that a few of us are in here and we're ready to go. Okay, so what are we seeing right now? What are we seeing right now? So, we're seeing right now, of course, that Bitcoin actually did for a split second there go under our 49 or our $40,000 mark, which I know freaked a lot of you out. That's why I jumped on the live. I was like, okay, I know people are kind of nervous right now. So let me go ahead, let me jump on live. Let me kind of talk about what I'm seeing. So what's interesting is that for a split second there, we actually saw that Bitcoin's price push down below. We saw Bitcoin's price push down below our $40,000 mark. We did not come down to our key level, which was at 39,618. We did not lose that, which was great. We did not put in that lower low, so we're still holding up just barely, but we are definitely still holding up. And we saw a very big wick, right? So I mean, this is pretty extreme. Now remember, Bitcoin has a tendency to retrace wicks. Okay, what that means is that it'll wick, it'll recover a significant amount, and then it has a tendency to retrace the wick unless it sees an hourly close above the previous wick or above the previous candle. What that means, we put in this close here, and let's give it $41,000. So unless we close back above $41,000 on the previous candle, likelihood is we will retrace down on this wick. Okay, I mean that's just what Bitcoin does. If we look at every single big wick that there's been, you can see here, even for this example, boom, we retraced. We actually got the close up here, so it's good, but we eventually pulled back down to it. You can see here, big wick, boom, we pulled back down to it. Same thing here. Literally all your big wigs. This one was a great example, but it didn't hold up. But you can see that bullish, that big bullish green candle that came right after it. But I definitely wouldn't be getting too excited just yet. We kind of just did open this hour. So I wouldn't really go ahead and say that this thing is out the water yet. Of course, this was a great bull sign. The amount of accumulation that happened at $40,000 was absolutely phenomenal, right? I mean, I don't know if you guys saw that, but I was watching this thing on the 5-minute charts. It was ridiculous. So look at this. I mean, that's 10 minutes right here. We pushed from 39,600 to about 40,800. It was beautiful. Okay. I mean, that was a very good bounce from the bulls. It showed that the bulls are still willing to accumulate at that level. Volume is declining a little bit. So I'm assuming that this move may see a bit of a pullback soon here. But overall, what we saw here was pretty exciting. It was nice to see, of course, that we are seeing that bullish momentum and we are seeing the bulls stepping in when we are pushing down to key support levels. But of course, that is something that we need to see holding in the long term. So this is nothing compared to 2017. Yeah, dude, that was nothing. The volatility now is definitely not as bad as it used to be. So, what's up, everyone? Peter, Team Green, Paolo, Dangerous Crypto, Cryo, Big N8, VEFGE. What's up, everyone? So, in today's stream, I kind of just want to take a little bit of a look at what I'm seeing on the charts. I'm going to talk about some of the on-chain metrics. We're going to kind of scroll through Twitter. We're just going to chill, okay? We're going to kind of talk about what some of the possibilities are here and where I think that this thing is going, okay? Because as we are creeping down towards this $40,000 level, you guys know it is extremely important that we do hold it, right? We don't want to see the price of Bitcoin falling below it because, of course, that does entail that many of our cryptos could see pretty substantial losses, right? I mean, we could see a rather large continuation to the downside here. Okay, so with that, of course, we don't want to see that. In the best case scenario here is that we do start to find some support. So let's go ahead and let's kind of get into this thing and let's take a look at what exactly we have going on. So first and foremost, we're just going to start with Bitcoin. We are going to We're going to start with Bitcoin. There's a few things I want to show you on the 4 hours and on the weeklies. There's something I'm noticing real specifically with in terms of, as you guys can see, I have it pulled up for you, bullish and hidden bullish divergence. There's something I'm noticing, a little pattern that is quite bullish, so it's something that's exciting to see. And then we are going to and then we're going to take a little bit more of a look at what we're seeing on the weekly charts. We're going to zoom out a bit. Then we're going to look at the on-chain metrics and look at some individual cryptos, Solana, AVAX, Ethereum, Link, Uni. We're going to look at all of these, so definitely do stay tuned for that. And if you are rewatching this, timestamps will be provided for you there. So with that being said, mi amigos, let's go ahead and let's get into this thing. So there's something that I'm noticing here that is happening on the 4-hour chart. So start small and let's go big, okay? So what I'm noticing happening, okay, let's go ahead and I would like to, I'm not going to clear off charts actually. I'm just going to get rid of some of this stuff. So I would like to just kind of clear all this off. Let's just do that, okay? I'll leave that one. There we go. So something that I'm noticing is that the bulls are still very bullish. And whenever we're seeing, let's see, crypto fear, I kind of want to see what this is at right now. I haven't checked it this morning actually. When we pair what we're seeing right now, it's 23. You know, we have definitely seen some recovery, but we have been hovering in this fear to extreme fear market. What we are seeing, though, is technically the bulls are still extremely bullish. Now, let me explain why I'm saying that the bulls are bullish, because it may not look like they are, okay? Now, the way that you can kind of go ahead and gauge how we're feeling and if the bulls are bullish, in a way, is kind of considered, you know, how are we performing against momentum? I think that's always the most important thing to look at. And what we're seeing in regard to how we're performing against momentum is that we're holding up quite well. You know, even though shit is getting ugly and we're, you know, in the low 40,000s, we're holding up well. And that's always a good sign. Now, let me kind of explain my thought process of why I'm, you know, what I'm seeing and how this applies. Okay. So ever since we saw this big wick, okay, let's go ahead and let's go back here. Ever since we saw the big wick in which we put in, which was on, let's go ahead and say December 4th. Okay. I don't know if you guys remember what you were doing during this week, but I sure do. I remember watching it go from 56,000 to like 42,000 while I was playing pool. Okay, it was like the worst pool game of my life. And I still lost, so it made it even worse. But what we saw again was this big wick. Since then, realistically, we kind of figured that there could be a retesting of these levels. Now, I know it's easy to say, you know, hindsight's 2020, but we were calling this when we saw this big wick to the downside and we saw the price return back up within the, you know, a 4-hour close. I told you guys, I said, I'm not buying this. I don't believe that was the bottom, because realistically, Bitcoin almost never recovers that fast. Okay. And almost never will see a huge liquidation event like that is followed by just an immediate uptrend. It usually leads to a wick, a retracement back down to the wick, establishment of support at some given point, and then get a continuation upwards. We saw it back here with these lows. We saw it even back here with these lows. I mean, it is just what it does. And so now that we are at this level, it starts to become, do we start to enter into stage 2? Do we start to enter into the, you know, the next step, which is recovery, right? Now that we've retested some of these wick lows. And I do believe that's possible. And what we're seeing from the bull says that it is within the realm of possibilities at any given point. Okay. So looking at what we're seeing right now is the fact that realistically, we're in a downtrend. It's ugly and it doesn't look good. And no one can really change that. There's no point in pretending that's not what we're seeing right now. But what we're seeing is the fact that as the price, for example, on the 4-hour charts over the last, let's go ahead and say a couple of days. Let's start with a couple of days. We'll go to about a week and then we'll go to the weeklies. Okay. What you can see is, let's go ahead and do this. We can see right here. It's very clear as day. We set in low number 1, 2, 3, 4, and some type of rounding off structural bottom here. Okay. Now, of course, we've not really seen a bullish reversal just yet. So realistically, this is not the bottom, but you can see that we are putting in lower lows, just a little bit less exponentially, right? Almost as if it's looking to curve. Now, in the same time frame as we've been seeing this downtrend, in the same time frame that we've been seeing this pull to the downside, that's been accompanied by our 4-hour RSI seeing growth. Now, what this tells us is that as our price is starting to set lower lows and our RSI is failing to set that lower low, and we are seeing higher lows, what this means for us is that we're starting to see something that can be considered. Let's go ahead. I'm going to get this pulled up. This is going to be considered just your regular classic bullish divergence. Okay. And you go ahead and screenshot this to do what you'd like to do. I don't really use these. I don't use Investopedia and everything like that. But if you don't know anything about divergences, learning these things from the technical and the fundamentals before you try to apply them is always a good idea. Okay. But what you can see is this is going to be our bullish divergence. Now, the reason this is bullish divergence is because it means that at the moment, our bears are struggling to push this price down far enough, right, in order for it to be validated by our RSI, in order for this thing to continue its bearish momentum. What that means is that it can, in relation to the relative strength index, they are losing their relative strength as bears. Okay. And so now that's always important and that's always critical because realistically, we want to see the reversal, right? Unless you have short positions open. And so, of course, this in the 4-hour charts doesn't mean that the reversal is going to happen now. But realistically, looking at divergences, they do sometimes have these time frames. But realistically, it's not about the time frame, but it's just about gauging momentum to see what the realm of possibilities is. What I mean by that is, say if your price is approaching a key level of support, and you mix that in with a very strong bullish divergence, that tells you that it even further increases the probability of us being able to hold that structural support in order for us to see a continuation as the bears start to fail as we approach that key level, if that makes sense. And so what we can see is that is exactly what is happening as we're getting down to that key level, which is around 39,700-ish, roughly. Y'all stop arguing in the chat. Quit it. So what we're seeing right now is, again, the bulls fighting back, and we are seeing the bears failing to, continue that downward momentum. Now, remember, that does not mean that right now it is going to see return, right? Realistically, what did we see back here? We saw a low. We saw a low, a low, a low. And we saw this kind of rounding off pattern similar to what we saw here. In that same time period, we saw low, higher, low, higher, low. We started to see the same exact thing. We started to see the bears failing, but it did ultimately lead to a liquidation event to the downside. Okay. So it doesn't necessarily mean that this is the moment. But what it tells us is that every time we keep seeing these little bullish divergence or even hidden bullish divergence at times, it tells us that we are still seeing the bulls fighting back. And when you mix that in with the idea that our crypto fear and greed index is still at a level of 23, which extreme fear is historically reversal levels, mixed in with the idea that we are also holding up at around a key level of support, around this $40,000 to $37,000 area, that could be a good sign that some type of growth is coming, especially as we do get extended to the downside and set some pretty historical lows on, not historical as in all of history, but historical as in a macro sense, on the charts, on the RSI. So overall, things do seem to me as if, although on the surface it may be ugly, deep down there may be some bullish sentiment still there as we are seeing the price hold up. Now, it's not only on the 4-hour charts, it was also on the weekly charts. We saw another kind of divergence, which looked like hidden bullish divergence, okay? So as long as the S&P is pulling back, no indicators are going to help, bro. It's pulling Bitcoin with it. Yeah, sure. And that's absolutely, that's a very fair point. But again, remember, my indicators, and not my indicators, I didn't make these, obviously. But indicators are not simply to sit here and tell you what's going to happen or try to say that it's going to go against the market. It tells you, are the bulls fighting back? Are we seeing the bears that are pushing down even the S&P or Bitcoin? Are we seeing them struggle? Because if they're starting to struggle, then that starts to open the door for the bulls to kick in, which could turn all markets around in the right environment. Of course, I'm not expecting a huge reversal right now or anytime soon, but you get my point. It's not to predict the future. It's simply just to say the bears are struggling. It's factually proven at this point. Okay. Now, something that is interesting that is happening right now on our weekly RSI. I like to use RSI for bullish divergence. I'm not extremely big on overbought and oversold. Of course, it is kind of a decent way to gauge whether we're extended to the upside or the downside. But I am big on divergences. I like to see, what are we doing against the trend? Are we going with the trend? Are we pulling against the trend? Are the bulls struggling? Are the bears struggling? What can we expect? Because remember, as we started to round off, right? Looking at the top side, as we set this high, we saw the pullback. As we returned and we started to see signs of reversal here, we could also see that the bulls were struggling to recapture some of those previous levels, and that did in turn lead to this fall, right? So I love divergences because we saw, of course, bearish divergence here. Or where we set the higher high, it was like a baby higher high, lower highs here, obviously. But I do really like divergences on the bottom side as well. So what we can see happening here is the fact that we have now officially, which is great in my opinion, gone down to set a new lower low on the weekly RSI. Now, inherently, that's bearish, obviously. No one wants to see that we're doing it. Well, buckle up. Shit, we're in it now, so you might as well just get used to it, right? So what's interesting at the moment is the fact that we have gone in to put in a lower low on our RSI in comparison to what we saw to our summer low, okay? Now, something to note is that if we were able to have held, above this previous low in which we put in back here, which we are still doing at the moment, we could have seen another case of divergence in which we saw here, lower high, higher high. But at the moment, with it being so even, I wouldn't really go ahead and pay too much attention to that. I am more, I'm looking at this in more of a long-term macro scale at this point. I'm not really too focused on the lows in which we put in September. I do believe that this pullback that we're seeing could be a little bit more extensive, and it could be a little bit more long-term before we do see some type of growth. Okay, that is what the indicators, that is just what the market, the environment, and the overall economy feels like. Okay, now, that could mean slow growth, slow gradual growth, but I'm not under the belief that a parabolic move is coming within the next month or 2 months. Okay. Now, looking at what the summer did, okay, in which we've been comparing this fall and this pullback to the summer, it is looking a little bit different up until this point now. It is looking a little bit different unless we are able to see some type of recovery soon here. It is finally starting to diverge away from this, but that doesn't mean that the setups can't be similar. But what we are seeing is the fact that as we did set some of these lows, boom, and as we did are looking to establish some lows, right? We have seen at this point, we have seen higher lows for now. As long as we're above $30,000, we have seen higher lows, and we've also seen lower lows. Now, what that's going to be for you is some classic hidden bullish divergence. Now, what this means, to keep it as simple as possible, do go ahead and screenshot this if you'd like, or go to tradingsetupsreview.com. They're not sponsored. I just use it. Okay. What this looks like, a hidden bullish divergence occurs when the trend holds up despite the momentum going against it. Now, we can see a prime example of that because the momentum of the price, as the bears are having a little bit of success, as they are pushing this thing down, and as we are seeing, the RSI in a constant downtrend, realistically, since January of 2021, we can see that our price is holding up. And now what this generally means is that as we do start to see the price get extended and our RSI get extended back in, these levels here, what needs to happen is that the price needs and the indicators need to reset themselves. Now, is this a bad thing? No, I don't believe it's a bad thing, personally speaking, because realistically, the only way to see longevity in a market is for there to not be an overextension. When there's overextensions, there becomes the more increase in risk. Increase in risk starts to kind of turn away investors, the bigger investors. We need to see some of that risk get taken off the table. And of course, that comes with these pullbacks, and that comes with the cool downs and the boring moments. Okay. You can see that as low as the 4-hour charts on Bitcoin and as big as the overall economy when we think about inflation. So what we can see is that over the last year, we have been seeing this cool down happening in which our RSI starts to work its way to the bottom side. Now, what's exciting is that we've seen high number one, high number two, lower high. We've seen low number one, low number two, which currently is a lower low. But in that same time frame, as we saw the highs push up, we're not seeing this lower low. And what this means is that the market and the price of our price of Bitcoin right now, which has control over the majority of the market, is holding up well at these levels due to the 4-hour chart, due to those bears having the bears struggling, due to the bulls fighting back and the mass accumulating we're seeing at support levels. The bears are struggling to get the price down, even though the momentum of the market is decisively in a downtrend, clearly from our RSI. So the fact of the matter is that if at some given point we can see a reversal and we can see the price hold up, even whether that looks like now or whether that looks like down towards $32,000, I am under the belief that as long as we are above these lows in a more macro sense, we can very obviously and clearly see that there is pretty extreme divergence here in the sense that we can see continuation back to the top side. Now, we've been paying attention to this low, but now that we've approached it, we need to look at this in more of a long-term perspective, because unless we hold up here and push back above $43,000, we're probably going to invalidate this, and the possibility of the head and shoulders pattern or some type of bullish pattern pushing us to 32,000 is on the table. And if you want to say it's not on the table, you're kind of being a little bit extra full of hopium. Okay, just look at this from a normal perspective. Okay, take your emotions out. Stop staring at your wallet all day and look at this from the normal perspective. What it says is that in the short term, if we do continue to receive this retest of $40,000 and we start to see it push back down, yeah, there is a chance that we start to create something of this ascending wedge, right? There is some chance that we create this pattern here, but there is a strong chance of this pushback to the downside, towards the $32,000 level. But there's always the but, okay? Let me offer you the hopium. The hopium there is that as we are seeing that happen, as we are seeing the price possibly come down to even set in a higher low on a macro sense, we're seeing our bulls fighting back. We're seeing the price holding up against the larger momentum of the market, which looks like lower lows. Because if the market was moving in tandem, okay, in tandem with if the prices of cryptos were moving in tandem with the RSI, we would already be back down below 30, probably $29,000. We would be much lower than we are now. But that's not what we're seeing right now. We're starting to see the price holding up well, and as long as it is able to do so, we are still in the range to see, the $75,000 area eventually, even sometime this year. Okay, so what does that realistically mean for us? Well, I think what it means for us is that we have to pay attention for these signs of reversals. And I feel as if until we start seeing signs of reversals and until we start to see the prices of cryptos really see the confirmation which we're looking for, I'm not really under the belief that we should be buying right now. Now, I know that's crazy, and I may sound quite bearish in this video, but I'm really not. I'm just being a realist. The realistic perspective is shit's looking ugly. Let it get good. Look for confirmations. Then we start to look for buys. Okay. All right, Arizona, have a good one. Have a good one. But what we can see is that realistically, right now, we need to be looking for confirmations to the upside of if the bulls are starting to get a little bit more momentum, if the bears are starting to slow down, and if our indicators are looking good. When do we get that bullish confirmation of clearing something like a macro level high on maybe the daily charts or something? Then we use that bullish momentum to then start to make justifiable purchases with, of course, a set of stop losses, obviously, as the market is at risk of seeing continuous falls. So let's kind of talk about how we do that. Okay. So let's kind of jump into the chat. Before we get into some more confirmations, let me jump into the chat just quick, just see if there's anything in here important. This makes me want to sell my house and truck to buy this dip. I don't think that's a good idea, but I am not your financial advisor, and you do what you choose. Let's keep it real. Obviously, yeah, we got to keep it real. Always, 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 always. Arizona, I appreciate you, homie. I appreciate you. I appreciate you. Yep, playing the waiting game for sure, for sure, for sure. Buying all the panic sell. Yep, awesome. Okay, so all right, let's go. Let's keep it going. You guys seem to really chat's kind of slow today. People are just watching. I'm always cool with that. Okay, so what does that mean for us again? What does what we just talked about? The fact that we are seeing more of the possibility of a macro downtrend, but the fact that our bulls are fighting back based off 4-hour bullish divergence, based off of weekly hidden bullish divergence, we are still seeing the bulls wanting to hold on to this thing. Well, let's kind of talk about what does this look like? Okay, what does this look like for us? So, okay, this is a great question really quickly. Any advice on how to approach more? This is not advice. You heard me. Any advice on how to approach more speculative plays like Hero, Soul, and others? I have a small 300,000 position on here. I'm holding, but it is a good time to buy now or wait. I definitely do not think that right now is the time to be accumulating microcaps. Some people may disagree with me. I think they're at the biggest risk of seeing the most catastrophic falls right now. And I'm not under the belief that making that purchase right now would be the most justifiable thing ever, especially while the market's not even remotely in an uptrend yet. I couldn't justify that. Be holding if you have long-term belief in it. That's what I'm doing. But definitely I would not be buying if I was in that position, which I am. Okay. So looking at what we need to be looking at, okay, is a few things. Let's go down to the 4-hour charts. I'm going to take a look at what it looks like. Does it look like we're going to see reversals? Then we're going to jump in. So we're going to stick to the technical analysis. We're going to finish up the technical analysis, and then we're going to dive into some of these on-chain metrics. Okay. So the biggest thing that I'd be looking for right now is, do we start to break the trend? Do we start to see the reversal back to the top side? Okay. So is it better to hold right now or try to predict highs and lows within the fall to increase gain? I wouldn't be trying to predict highs or lows right now. I definitely wouldn't be doing that. So I'm personally just holding. So show the monthly chart. Okay, we will in 1 sec. Okay. So looking at the 4-hour charts here. Okay. Realistically speaking, what I would like to say is that 43.5K is our new point of reversal. I would say that if we're able to clear that, that's definitely a good sign. It's not confirmation completely, but it's definitely a good sign that on a more of a midterm sense, we have started to see the bullish pressure that we needed to recapture a key level. Now, until we were able to clear 43.5K, I don't really see a point in buying. Okay. The reason being is up until that point, we're still below all of our short, mid, and long term EMAs. Up until that point, we are still in a structural downtrend, which looks like lower lows and lower highs. And we are also still, not seeing much recovery in terms of our Bollinger Bands, especially on the 4-hour charts. Because as you can see, at that point, we would still be, in more of this negative slope here. Now, looking at the daily charts, it may paint a little bit of a different picture. We could see the price pushing back up towards this level, and then we get above our 20 SMA. And of course, it does come down to, can we break above that 20 SMA? Can we hold it? Can we continue upwards as we are seeing a widening of our Bollinger Bands? Sure, we need to pay attention to that. But the first step realistically comes to getting above 43.5. And then from there, we need to start to pay attention to, can we get above the 20 SMA? So I'm going to give you guys, forgot the disclaimer. Oh, yeah. So if I'm going to give you guys two main things to be paying attention to, I would go ahead and say the 20 SMA on the daily charts is going to give us a lot of information. And we always need to see the recapturing of more of a structural high, which at the moment, in terms of this downtrend we're seeing right here, looks like $43.5 thousand. Up until that point, I don't see a point in accumulating. Okay. I really don't see why, right? Because, Megan Gus, I appreciate it. I appreciate it. Thank you so much. Thank you so much. So looking at what we're seeing here again, right? We're in a downtrend. And if you want a dollar cost average, you can dollar cost average. I can't tell you what to do. But personally speaking, I don't see the point in dollar cost averaging when the technicals say that we are still in a downtrend. And in terms of the realm of possibilities, the likelihood is we do continue into this downtrend. We do continue to see a bit of a fall unless we clear 43.5K. So if we have a level that kind of starts to dictate a little bit of where we could start to see growth, why not do it then? Maybe lose 8% in growth here when you can save yourself the possible 20% of a loss there. That's my opinion on the whole thing. So 43.5K and the 20 simple moving average on the daily charts are my two key levels. Okay, that's my two areas in which I'm paying very close attention to. Really not doing much accumulating or doing anything up until that point. Now, in terms of downside, when does this start to really get ugly? Okay, let's kind of talk about when does this really start to get ugly? Well, personally speaking, considering the fact that we are getting daily closes that are quite equivalent to the lows in which we put back here, I'm going to go ahead and say that at the moment we have not realistically set the higher low. Okay, I would go ahead and say we've set an equivalent low, but a higher low would definitely be a bit of a reach. I don't really think that would be justifiable to say. So what that means for us is that we need to zoom out even further and we need to look at this thing from more of a macro sense. Okay. We have to start to look at this thing in more of a sense of, okay, we have these waves, we have these moves, and we are still in an uptrend for sure. I mean, as we are setting these higher lows here, as you can see, but realistically, this is more of a long-term move, and this could take a little bit more time to resolve itself. This could look like another month. This could look like another 6 weeks of boringness, or it could look like another couple months before we get up to these previous highs, okay? Because we have started to lose short-term levels of support that usually resorts us back to long-term levels of support, okay? So what it looks like for us is, since we are going to focus a little bit more now, in my opinion, I think it becomes much more wise to focus on this move from point A to point B. I'm going to go ahead and start off in terms of bottom side support with our Fibonacci's. And this is going to tell us a lot in terms of where these key structural support levels are. Now, looking at our Fibonacci's, we of course have our golden ratio. We have this green pocket right here, boom, which is going to sit between 37.8 thousand and let's go ahead and say 44.7 thousand. Now that we're seeing, the price enter into this retracement zone, we know one thing specifically. Whenever we're talking about our Fibonacci, what we know about the Fibonacci is the fact that as we set lows and as we set highs, your price will retrace back to that Fibonacci zone at some given point, usually, more often than not. But what we know is that if it is going to reverse, it is going to reverse at this level. If it's going to reverse, it's going to reverse between $37.8 and $44,000. If it does not, there is a much higher chance, 7 out of 10 chance, that we will resort back down to some of these previous levels of support, which could look like as low as $31,000, $32,000, $30,000. That is just statistically proven based off Fibonacci. Now, could there be an environmental event that kind of stops that? Absolutely, right? Technical analysis is not the know-all be-all. Technical analysis does not predict the future. But technical analysis, while nothing else is happening, is extremely important, in my opinion, to gauge where we are in terms of bullish and bearishness, in terms of where the realm of possibilities lies. Okay. So what I'm looking at now that we have come back down to set an equivalent lows back here is that the door to $37,800 is open. This is extremely, extremely, extremely possible. Do I think that it is going to happen? I don't know. Okay. But do I think it's possible? 100% sure it is possible. So what that means for us is that as our price does start to retrace and as we start to set lower lows here, right, with very possibly lower lows, if we push back down below that bottom wick there, we are definitely on the table to see that push. So what that means is that as this is happening, we need to now monitor $37,800. As long as we are above this level and as long as we are holding above this level, I think we are safe to say that we are good, from bear market talks. Because now we are kind of trying right now to lose this previous more macro low. Okay. So I told you guys, as long as we're above this, we're not even close to a bear market. Once we're below it, it gets a lot closer. And we are around that area. Okay. Now, there's a couple more confirmations, of course. What we would realistically need to see in terms of bear market talks is that we come back down and put in this, this low. We start to invalidate the idea of putting in the higher low here, because what's going to happen is that if we lose $37,800, we have to consider, are we in some type of ascending wedge, an accumulationary pattern as we are coming out of this extension, right? As things did start to get overextended, did we enter into some type of consolidation event that is followed by a blow off top? That's what starts to get considered once we lose 37,800. And that is the final level of anything. That is like, okay, if we start to lose that, we're done. Okay, we're going to see this thing be ugly for a few months. Even worse. Okay. But that's not what we're seeing yet. We are still holding up into our key support level that stops us from falling back from down here. So I don't think $32,000 or $31,000 is even roughly in the picture. People who say 28K or 30K, I don't think any of that is in the picture right now while we're above 37.8. But it is becoming much more possible, and we do want to see, of course, that reversal happening relatively sooner than later. But don't forget that what we're seeing in the market is the fact that, again, our bulls are fighting back and our bears are having less success. Okay. Remember what we're seeing lows on the 4-hour charts while we're setting these highs or these higher lows, right? Where we're looking on the weekly charts. We have not seen the equivalent fall in the price. We haven't set this lower low here as we are setting the higher low. So what it tells us is that at any point that we see more of a macro reversal, we could see an extensive reversal, right? We could see extreme growth due to the fact that we will see that reset here on the RSI, but it needs to happen. And the first step is, again, $43,500 right now. Okay. So that's my outlook on the charts. That's my outlook on the technical analysis, is that it is getting uglier. The bear market is definitely much more reasonable to consider now, but realistically, in terms of more of a macro sense, we are not there just yet. And I'm not going to sit here and lie, right? I'm not going to spread hopium, but I'm also not going to spread unnecessary doubt. Okay. Now, looking at some of the on-chain metrics, let's kind of study and just evaluate how this thing looks a little bit even further behind the scenes. Okay, let's go ahead, let's zoom out, and let's see what we're seeing. So one of the biggest things I like to see is exchange outflows and inflows. What this means is how much Bitcoin is being put back and sent back onto exchanges. Now, of course, when we see for example, exchange inflows. It has a good chart description. Yeah, here we go. You guys can just read this chart description, or screenshot it, do whatever you want to do. But as you can see, the total amount of coins transferred to the exchange. So it means how many coins are being transferred from some of your cold wallets, hard wallets, whatever, back onto your exchanges. Generally speaking, the higher the value indicates. 1 second. Don't mind my big old gallon. You guys know I have a fight in 8 weeks. I'm an MMA fighter, and so I have to drink a gallon of water a day, which sucks. But so what it means for us is that as we start to see crypto and Bitcoin being sent back onto our exchanges, realistically, that's not good, because that means more people who are willing to hold in some of their off the exchange wallets. That means that they're starting to get a little bit more nervous and they want to do transactions. Typically speaking, if someone's wanting to buy crypto, they're not sending their crypto from their wallet back onto an exchange. They're just buying it and sending it out the exchange. Okay. And so what we know is that as inflows increase, that is bad. As inflows decrease, that is good. Well, what's awesome to see is that in more of a macro perspective, that also supports my idea and my belief that we would still be able to see some type of continuation here with, 145 pounds is what I'm finding at. With the idea, it very runs in parallel with the idea that we could see some type of support holding in the continuation here, is the fact that in the same time period from when we saw our peak to when we saw, where we're at now, we are still seeing this consistent decrease in the price or in the overall levels of exchange inflows. What this means is that after we saw all of these retail investors get out, after the Safe Moon hype, after the meme coin, the Doge, all of that excitement, once we saw all of those retail investors get out, many of the long-term holders are still holding. Many of the people who are, more content to just sit back and watch, they're not really doing much. And we're seeing the level and the amount of people who are selling decreasing. Although it may look like the price is falling, the amount of people who are sending money or sending cryptos back onto these exchanges is decreasing consistently. And that, again, supports my theory that we could see a continuation because that selling pressure is decreasing in terms of the amount of people putting it back onto exchanges. Okay. It's not the overall big picture, but it's a big, important piece of the picture. Okay. And so, considering the fact that bears are struggling, considering the fact that we are seeing that divergence, considering the fact that we are seeing inflows decreasing, even with this big ass fall we saw right here, you can see that the inflows weren't even significantly close to what we saw back here. It definitely says that there is still that bullish potential there. Now, it's not bullish momentum, but it's bullish potential, and that's always important. Now, when we look at exchange outflows, something that's beautiful is that although exchange outflows have been going down, which also says that there's a bit of a balance. There's a bit of a 50-50 in the market right now because people aren't really sending it back onto exchanges, but people aren't really sending it off of exchanges. What that means is that the level of volatility is so strong. And this is my take on it, is that as volatility is so strong, people want to keep it on those exchanges. One, probably because they're retail investors and they don't understand the problem with keeping crypto on exchanges. And two, they also are, so caught up in this volatility that they want to be able to get out if need be. Okay. But what we can see is that if we zoom in, let's go ahead and let's kind of just zoom all the way in here. I might have went a little bit too close. Hold on. Let's see. I want you to be able to see this big picture. Here we go. Since we saw the big wick and we saw the outflows increasing, which was interesting, right? That shows accumulation. We can see that we have been seeing, oh my gosh. Look at this dude. Okay, what we can see is that we can see exchange outflows increasing. Okay, now in the short term, the fact that exchange outflows are increasing, I think that's honestly pretty interesting to see because it shows that people are still confident enough to the point that they're still sending crypto off of these exchanges. Okay, it's an interesting take. Exchange outflows are not as reliable, in my opinion, as exchange inflows, but it is interesting to see that people are still a little bit willing to send it off of these exchanges, not necessarily focus too much on having it to be available to sell. And they're more adapt to long-term holding. That's interesting to see. Again, I do like studying inflows more than outflows because I think inflows are much more reliable in the sense of how we can use them to gauge market sentiment. But I do think it's very interesting, to say the least, what we are seeing right now, considering the fact that we are seeing a downtrend, except for this week right here, we are seeing a downtrend in inflows. Okay. Now, looking at this thing, there's a few other ones that we can go ahead and pay attention to. One, of course, that I do like to see is the exchange well ratio, just to kind of see what they're doing. Okay. Now, what this is going to be, I'm going to let it pull up a description so you can see a good one. And I'm going to jump on this. Tyler, can you look into your crystal ball and tell us? TA means TA literally means that I am a psychic and that I know everything about everything. Brandon, I wish, dude. But what we can see is that something very interesting happening. So exchange well ratio is going to be the ratio of the top 10 inflows to the total 10 inflows of the exchange. High values indicate whales are using the exchanges in large amount. So it doesn't say what they're really using them for, but it says that they are using them. What that means is that whales are much more active. Okay. Now, what's very interesting is that we have been seeing the whale accumulation still happening. We're not really seeing our bigger whales selling off right now. We're not seeing a lot of those hedge funds really selling off. Maybe some, but not many. It's not something that I'm very oh my goodness, what is this chat? So what we are seeing from the exchange whale ratio is that the whales are getting more active. Okay. Now, over time, as we have been seeing much more mass adoption, as we have been seeing some things, even like Ada Cardano partnering with Dish Network, as we have been seeing them work with Samsung, as we have been starting to see a little bit more adoption in terms of Facebook and the metaverse, we have started to see that the well and the overall mass adoption that is followed by, I believe, mass adoption leads to even larger whales, obviously. We have been seeing an increase in the whale activity, especially over the last couple months. And so what we can see is that the whales are remaining active, and that when we see these big falls, they're typically followed by these big pushes right here. I'm under the belief that these are accumulationary events from the whales. I could be wrong. I could be wrong. But that's my belief here. Okay. And so, personally speaking, as we have been starting to see the whales kind of increasing, and the whales themselves still do seem to be buying more, I think that's a good sign to even further say that they're liquidating people. We know that, but they're also still confident. And the confidence there by the people who control the market is, of course, something that's beneficial, right? So that's also very, very good. Now, looking at the estimated leverage ratio, this is something that is not really doing that. Nah. But what we can see is that the leverage is still increasing dramatically. Okay. Now, remember, I am still under the belief that leverage definitely can be, we definitely can be seeing this leverage increase happening by the people picking up some of those short positions, some of those people betting on the market to fall. We did see something similar like that happen back over the summer, in which we saw leverage dramatically increasing due to people being under the assumption that, oh, it's going to 20K, oh, it's going to 10K, it's going to 15K. And as we saw in this little time period that people were getting a little bit more nervous and a little bit more worried, the amount of confidence that they had in the market falling increased, leverage increased as they took on those bets. They got liquidated with the increase of price. As you can see, as price took off, leverage decreased. That shows an upside resolution, which means that there was a short side liquidation. Okay. So my belief right now is that there's no way in hell that leverage is growing at this rate, and that is long leverage. I don't believe that that is possible. Okay. Not 100% sure, but that's my take on it. You guys know I'm not going to claim to be an expert. I'm not going to claim to be anything. Just a guy who's been around for a few years, giving my opinion on what I've seen based off of my experience. Okay. And I'm under the belief that there's a significant amount of leverage in terms of downside as well. I'm under the belief that there could be a bullish resolution of this as people are so confident that this thing is going towards $30,000 or even dropping below $40,000 that it could lead to some growth within the near term. Because if you see, as the price drops, leverage increases dramatically. That's an increase in the confidence that the market's going to fall. But realistically, the majority of this leverage is not your whales. The majority of this leverage, in my opinion, is your retail investors who tend to get liquidated by the whales. Feel what I'm saying? So considering the fact that we are still seeing kind of an inverse correlation between leverage and the price in terms of a downtrend compared to an uptrend, whenever you consider that with the decrease in the inflows, when you consider that with the increase in the outflows, when you consider that with the failing bearish pressure on the weekly charts, because they are failing to put in some of these lower lows as they have here in terms of relative strength, and you pair all of that with the idea that on the 4-hour charts, we're seeing the bulls fight back in terms of mass accumulation at some of these key support levels, such as $40,000. I believe that this is definitely good signs. And that although we could see the push to $32,000, as long as we're above 37.9, realistically, on more of a long-term macro perspective, we can still see that bullish resolution to the top side. Once I get to a point that I'm under the belief we will not see a bullish resolution, I will tell you guys that, but I'm not there yet. Remember, we're looking for $43,000 to be clear, 43,500 optimally to be cleared. And if that is the case, I do believe it will have a dramatic impact on the market. Okay. That is my 45-minute thesis on what we're seeing right now. I hope you guys enjoy. So let's kind of turn the table a bit. We've been talking a lot about Bitcoin. Now let's take a look at what this means for alts. Let's take a look at what the altcoin market looks like. Let's take a look at what altcoin sentiment looks like. Okay. Now, before we move into our alts, let's go ahead. Let's jump into the chat a little bit and let's kind of chill and let me drink a little bit of water as I am. Yeah. I had one of my fighters fought this weekend, Saturday. I'm a coach as well as a fighter, and he fought, so I was doing a lot of yelling, and so my voice is a little raspy. Yes, I do. Investing in Bitcoin right now is pointless. You will max get 50% pump, so I don't get it. And that is definitely a very fair point. Called the 10 fear index on your last live. Yeah, you did. It was weird. Yeah. You pumped for the fight? Absolutely. I'm ready to scrap, man. I'm ready to fight. I've been out of the game. I haven't fought in about 9 months now. I'm ready to go knock somebody out, keep my spot. I'm number 2 in the state, number 30 in the south of the United States. I'm looking to continue this thing. Yeah, dude, he's too good. He's too good. So, okay, let's take a look at what's going on. This is what I love is when you get passionately into the process of figuring things out. I'm trying to, man. I give you guys my thesis. So let's take a look at altcoins. Let's talk a bit about altcoins. Go ahead, Tyler, future Tyler, put the timestamp. Damn it. Okay, so let's take a look at again. What's your record? I am 4-0. And if you guys ever want information about me, like as a fighter, just go to my Tapology. This is the best place to go. Fight Center Fighters 231-800. That's Tyler-Hill. That's your boy. You can see my fights, my rankings, all that good stuff. People I've beat, all that good stuff. If you just ever want info, you guys ask me about it a lot. So, okay. My man. So, will you start layering out of Bitcoin at or near 69,000? Yes, I will. So, let's take a look. Let's transfer this thing into altcoins, okay? So, what we're going to start with is Bitcoin dominance. Remember, Bitcoin dominance is the single most important chart in terms of the altcoins, okay? Incredibly important. So, with that being said, what we're seeing right now from Bitcoin dominance has been a gradual decline ever since October of 2021. Okay, we saw this macro high. We saw Bitcoin outperforming through the month of September as prices were falling. So remember this. Okay, let me start with this. Okay, when Bitcoin dominance goes up, that means that Bitcoin is outperforming altcoins. When Bitcoin dominance is going down, it means that altcoins are outperforming Bitcoin. The reason being is that Bitcoin dominance is measured based off of the ratio of the total market cap that is held by Bitcoin. For example, if the total market cap was $100 and Bitcoin was at $50 in market cap, what that means, market cap, not price, market cap. What it looks like is that alts, total 2, would also be at $50, giving us a 50% ratio on Bitcoin dominance. Okay. So that means that at that point, that if altcoin total market cap goes up to 51 and Bitcoin total market cap goes to 49, alts are doing better than Bitcoin, bringing Bitcoin dominance down to 49%. Okay. So what we've been seeing recently has been this downtrend in Bitcoin dominance. Even as market conditions have gotten a bit rocky and a little bit shaky and a little bit weird, we have been seeing that Bitcoin dominance is still or altcoins are still outperforming Bitcoin as Bitcoin dominance increases. So what this means for us is that though there is the fear in the market, though we are seeing uncertainty, though there are the talks of bear markets, people are still, up until this point, focusing on altcoins and are under the belief that altcoins do have potential to see growth. So what does that mean? There's 2 things that I've kind of rationalized in my brain that this could mean. The first one is the evolution in crypto. What that tells me is that crypto is evolving in the sense of maturity. The reason I say that is because in history, when we would start to see these big ass falls in prices of everything, that usually was entailed and followed by, let's go to like 2018, 2019. You can see this constant climb in Bitcoin dominance as we look in total market cap of 2018 and 2019. We're seeing this fall. We're in a downtrend here, which was followed by an uptrend. And yeah, I'm pretty sure you are. So which looked like an uptrend in Bitcoin dominance. This is normal. Okay. So beautiful, Brandon. Good catch. That's exactly what we're about to get into. Good catch, dude. So what we're seeing is that typically speaking, when Bitcoin dominance is increasing as Bitcoin prices are falling, people are de-risking. What I mean by de-risking is that generally speaking, Bitcoin is considered the store of value in crypto. That if crypto is going to be around, more than likely, everything else could fail. But as long as Bitcoin, and now Ethereum as well, as long as Bitcoin is around, we're good. Okay. Bitcoin is the most likely to be around. And so, of course, if you're going to be invested in crypto, you want to be invested in the one, while things are ugly, the one that has the highest chance of success. Okay. So it's considered the less risky asset, especially being backed up by countries, El Salvador, being backed up by VCs, being backed up by massive corporations. Of course, that does increase stability. And so usually what happens is that as prices start to decrease, we see Bitcoin dominance increase as people de-risk. They're taking money off of their alts, putting it into Bitcoin because they think it's the more stable option. Now, I personally was expecting that if we entered into some type of market lull of this nature since November 8th, that we would start to see our altcoins, maybe not perform as well. We saw this reversal here, and we would start to see Bitcoin performing a little bit better as we set the new all-time high. I think as we set the new all-time high, I think people might have been a bit concerned that now that we've set all-time high, fall at any points likely, and maybe they would start to look into Bitcoin as maybe it could approach $100,000, but that's not what we saw. What we saw is even as we have been in this downtrend and the total crypto market is falling, we're still seeing Bitcoin dominance decreasing. So what it tells me is that first and foremost, the confidence in altcoins is still there. Although we are seeing a little bit of a reversal, especially since we got that Fed news. The Fed news is what did it. That drove the ultimate amount of uncertainty and people de-risking. But even considering what we're seeing right now, it's really not that big of a difference. And it's realistically, the total market itself is falling quite proportionately to each other, right? And that the people who are going to get out are getting out of everything. They're not really just focusing on de-risking. No, they're just getting all the way out. And that while we are not really setting anything too extreme or extravagant right now in terms of macro highs on Bitcoin dominance, it tells me that this is much more seemingly a natural retracement or some type of cooling down for the total market than the entry into a bear market. It's my opinion. But not only that, it also tells me that we are looking at the big picture of things in a sense that things are getting more adoptable and things are getting more realistic. In the sense that the offers, the solutions that are offered by altcoins are becoming much more realistic in the sense of mass adoption because the use cases are holding them up right now. The use cases of something like Solana or Ethereum specifically, let's just use Ethereum, is becoming so much more relevant within the real world in terms of metaverse and in terms of games and in terms of all of these things that people have much more of a use and a reason to hold them other than trying to make gains in the short term. And that specifically leads them to be able to perform better, not great, but better in terms of in times of uncertainty. That is a fantastic sign for long-term growth in crypto as a whole. Okay. But as for altcoins, it's even better because it says that their potential and their spots in the future are getting much more solidified as time goes on. So studying the Bitcoin dominance charts, this does look great. It does seem as if we could see Bitcoin continuing to outperform, which could happen. You know, we could revisit some of these macro highs. It's possible. But at the moment right now, we're not really seeing anything. Just D Thorn Vlogs, what's up, dude? What's up, homie? Long time no see. We haven't seen anything too significant just yet. Not anything significant just yet that tells me, you know, we're going into some extreme moment of de-risking, which looks like everything getting ugly. Okay. Not yet. Not there. Okay, so looking at total 2, let's look at the technical analysis on total 2. What do we see? What do we see is a break to the downside, okay? And this further confirms my belief that we need to start looking at the summertime, right? In the short term, we're losing key levels. We have not come down up until this point to set the macro low. So we don't need to do it now, but we do need to keep these lows, the Fibonacci levels in between our lows and our highs. This little area, this is getting much more possible. Now, whenever we see these moments in which we'll start to see the price increasing, we enter into some type of triangle-like formation. Generally speaking, this is going to have, a resolution back to a previous level of support or a previous level of resistance. What does that mean? What does that mean for us is that typically speaking, once you lose a key level of support, boom, and it's in a some type of triangle. This is more of a falling triangle. You have your two previous levels that establish the trend. Those are going to be the ones that are going to be your two breakout targets. First one, second one. So at the moment, while we're at $1.12 trillion, you can see on a 1 hour time frame that although we lost it, we're back testing it now, but seemingly failing. We fell below it. We're trying to back test it, and we're not holding right now. So looking for $1.124 trillion recapturing on the total 2 market cap. Oh, reminder, total 2, sorry, I didn't explain this. Total 2 is the total market cap of all cryptocurrencies excluding Bitcoin. So this is the total market cap of all altcoins. But what you can see is we're retesting it. So we want to see us get back above this level right here and then start to look for growth, because until that happens, we may see this continuous fall back towards $1 trillion on our total 2, which does look like the lowest level since September. Okay. Now, again, more of a macro sense, our altcoins do seem to still be in an uptrend as we are looking to set the higher lows. But realistically, we have to see some type of confirmative reversal before we can say something that bold. Now, optimally speaking, we do see that reversal, right? Because imagine the scenario in which we come to back test up here, we see this great reversal, and we maybe even see a trend break here, right? And then off of that trend break, maybe even some type of wedge is forming. That could be interesting. We'll keep an eye on that. But anyway, looking at what we saw here is that we are still seeing that macro divergence, right? In which we are seeing a low and a lower low, and we set and back. I mean, for example, this is a low and a higher low. Okay. And so looking at how this thing is playing out, it shows that, hey, though it's ugly, though it's not looking good, the bears are struggling in a macro sense to get this price as low as they wanted to. And in relation to what we've seen historically, the bears are struggling to push this market down. I know this looks bad. Trust me, this shit used to be a lot worse. Okay. These moments in times of uncertainty looked much worse. Anyone who's here in 2017 and 18, these moments of uncertainty and extreme fear, quote unquote, looked so much worse. Okay. And so the fact that we are seeing prices holding and all of these divergences forming here and here are great signs of strength. And they're great signs that although the market can continue to pull back in the short term, even Bitcoin going as low as $32,000, if it falls below 37.8, it seems like we can see recovery. And it's not even remotely close yet. Okay. So altcoins look great. Let's look at some of our favorite alts, and let's look at specific levels that we can kind of start to use. At least if I sold too money, my 30K Cardano and Vet and Chainlink, maybe you should have Ethereum right now. Okay. I don't agree with you there yet. Not worried. Hey, Dave the Great, I'm assuming you've been around a while and you've been through much worse shit than this. I mean, dollar cost averaging is, if that's your plan, then hey, I think that long-term dollar cost averaging over the next 10 years will serve a lot of people well in the right investments, the Bitcoins, Ethereums, right? But yeah, I'm not really big into it, just dollar cost average anytime it falls. I'm not that type of guy, but I think dollar cost averaging long-term is always beneficial in crypto because it's just getting started. No one can convince me otherwise. So let's start with Solana, and then we're going to kind of move into some of our cryptos. So we drew out this, in yesterday's video, or the video from 2 days ago. At the moment, Solana is looking to hold some support, okay? Now, we're back in this little zone. We're back in this box, and I want to see if I'm pretty sure. Yeah, so we did fail a back test. So right now, in terms of Solana, $114 is on the table, okay? I know some people don't want to hear it, but it is on the table. Let me talk about why. So, of course, we were monitoring this. Pretty much everyone's down, right? I mean, just about everyone's down. It's totally okay. It's what happens. So what we can see is that we're in a downtrend, clearly. I don't really think anyone needs to explain that anymore. And we have seen, this descending wedge. Optimally speaking, we do see a reversal here. That'd be great. But, no point in spreading hopium. In terms of swing highs to swing lows, we had this swing high, swing low event in which we saw the price return back to its Fibonacci golden zone, attempt a breakout, failed to clear 0.236, which is final resistance at the VPVR peak as well, as you can see, VPVR peak here. And then you can see the price came back down and collapsed below the 786 level. Solana is now in range. Now that it's backtested and failed to recapture $145, it is now in range to see $114. Okay, that is possible. Really quickly, Luke, I appreciate the $5 donation, homie. All love to you, dude. Shorts have spiked big. Will the shorts be able to cover without causing a squeeze? I don't know. I think they're going to get smashed. I think the shorts are going to get smashed. I need to look into that. What chart are you looking at? So what was I saying? Yeah, so $114 is now on the table for Solana. Okay. In order for us to not see that, I would say $145 is the level we need to recapture. Until we see $145 recaptured, I'm under the belief Solana will continue its downtrend. Told you guys, if we lose the key pocket, the key level, it's going to get ugly. And that, hey, that's very possible. Now that we've lost it, we are down a pretty significant, 9%. Now, what's beautiful is the fact that as we are on the bottom side of this, possible descending wedge at the moment, and while we are also extended into the bottom side of our Bollinger Bands, we are still seeing, let's go ahead and zoom out on this thing. We are still seeing extreme divergence in which we set a low. At the moment, we're looking to set a higher low above $114, but we set this low and a lower low. So you can also see that the price is holding up well against the trend, the momentum. Because look, the momentum is downwards from overbought to oversold. I don't like overbought and oversold, but you get the point. From overbought to oversold. In that same time frame, we're still setting an uptrend, realistically. As long as we're above $114, we're still in an uptrend. We set a high, we set a higher high. We set a low, we need to set a higher low, and we continue up. But at the moment, what it looks like to me is that though $114 is on the table, we are still within the realm to see that continuation up until the point that we lose it. Now, if we lose this level, do understand my titles are going to get a bit, not the best. But up until that point, I'm not counting this thing out. The people who've counted crypto out tend to be the biggest dummies on earth. Okay. They tend to be the ones who have some of the most regrets in terms of crypto. Okay. So I'm not counting this thing out, but I definitely want to see that we're able to hold back above 114. Now, considering the fact that we are extended into the Bollinger Bands right now, I am under the belief we will see a resortment back to our moving average at some given point, considering we have seen 2 standard deviations away from said moving average with the opening up of our Bollinger Bands, approaching a key level of support. I think that establishment of support and retracement back to that key level, which looks like the 20 simple moving average, is very possible. And so step number 1 is $145. Step number 2 is the 20 simple moving average. Once we're able to do that, then we look at this wedge and then we get out of here. But until then, I'm not doing much, just kind of holding, just kind of watching. It starts at 145. Till we get above 145, I'm not. While we're between 145 and 114, I wouldn't even think about buying anything. Okay. I think long-term Solana will continue to grow if they fix their shit. But right now, I'm not counting this thing out. I have no reason to count this thing out just yet. Okay. So draw your range, $145, $114. Look and monitor how we interact between this thing. Okay. Ada Cardano is one that you guys were talking about earlier. I have it on here somewhere. There we go. So ADA has come back down. It has set this lower low, but remember, the same situation is happening right now, in which we're seeing the price working its way up, but we're starting to see a bit of a. Oh, I gotta sneeze. Whew, whew. My goodness, hold on. So ADA Cardano is down. Looking at this thing, I'm going to remind you what we're looking at here. We can see that a bullish divergence occurs when prices fall to a new low while an oscillator fails to reach a low. This situation demonstrates the bears are losing their powers and that the bulls are ready to control the market again. Often a bullish divergence marks the end of a downtrend. And what we can see happening right now is finally, for the first time, now that we've come back down to set this low, I know, obviously no one wants to see lower lows, but we can finally see that the move we're seeing from Ada Cardano is not supported by momentum of the RSI. Okay. And so the fact that we are finally seeing the bull somewhat fighting back gives me a good feeling about it, considering the fact that we are approaching these key levels of support, right? All these wick lows back here, all of this big volume we put in looking here, you can see, right? While we are approaching all of this here, while we're holding at this key level of support, the fact that the market is fighting back against it is a good sign. In terms of levels, personally, I would need to see ADA. It's quite far off from where I would want to see it. I mean, I would say I would go ahead and give this thing just a kind of like a short-term downtrend. I would go ahead and just say here, this is more of what I'm looking for. Okay. I'm looking for that clearing of the trend. Once we get that clearing of the trend, that starts to look a little bit more bullish and then we'll go from there. But realistically, ADA is not one that I'm looking super hard into buying right now until we start to really work our way back up towards 100 or the $1.30 region. Okay. Because right now it is definitely seeming as if we could revisit these 90-cent levels. Okay. So there's that. Okay. looking at dot, so looking at dot, one thing we can see is that we did see a bullish, a bear flag play out, which is very interesting, to say the least. Quite surprising, but interesting. And so what's the verdict on Bitcoin? Short term, it looks like it could be a little bit bearish. If we do start to come back down below $37.8 thousand, that looks a lot more long term bearish, and we start to look at $32 to $31,000. But at the moment, if we are still holding within the golden pocket from this swing high to swing low, while we're holding here, it does seem like the bulls are fighting back, and I'm under the belief that if we're able to hold this level, we will see that push to the upside. That's my shortened version. Looking at Ethereum. Ethereum is in a similar position in which we did lose the golden ratio from our September lows to our swing highs. Okay. And so now that that has happened, we are under. Let me make sure that's. Hold on. Let's just remove drawings real quick. Let me double check to make sure that, because it looked a little bit high, but it's possible. Yeah, that was a little high. Okay. So what we can see is that we did come back down. We saw Ethereum lose this key level of support. We failed to hold it. We were unable to hold it. Now $2,600 is on the table. Okay. And that's just that's just the name of the game. We have to start to consider the realm of possibilities. Once we lose the 786, it becomes much more likely that we will see a continuation to the bottom side. Okay. And so personally speaking, what I'm thinking about Ethereum is that there's the very fair chance that it does continue to the bottom, but I am under the belief that it will hold above this level. Okay. Reason being, looking at our RSI, we can see a complete fight against the trend. We can see that we are still continuously uptrending on Ethereum, while at the same time downtrending on the RSI, looking like a reset of our massive indicator here, looking like we are starting to see that the bulls are ready to take back over as they are fighting against the trend, right? We can see the bearish momentum here on our RSI as we are setting lower lows. Things are looking boring, looking very bland, but in that same time frame, we are still seeing the prices of Ethereum, holding up on some of these lows as we do trend upwards, which looks to me as if there's a reset here, which opens up this door for growth, which looks like new all-time highs for Ethereum. So Ethereum, realistically speaking, 2,600 is on the table, and I definitely wouldn't be doing any accumulating right now. Personally speaking, I would like to see, before I even thought about buying any more Ethereum, I would definitely like to see on the shorter time frames that we can get some closes back above, just our more on a 4-hour charts, our macro highs right here. I'm in 4-hour charts. Above $3,200. So once we start to let's move that up. Let's go a little bit higher. 3,250. If we can get above 3,250, that starts to look a little bit more like a reversal pattern to me. And then from there, I think we are still, looking decent for continuation. But of course, we would have to start to monitor things like the 20-day simple moving average and all that good stuff. Now, as we can see, it is extremely extended into the downside. Last time we were extended into the downside of this nature was back here before our growth. And similarly, we saw it multiple times back here. And so considering the fact that we are seeing this, the two steps we need to see is a clearing of 3264. And then from there, we want to see that we're able to recapture this 20-day simple moving average for Ethereum. From there, those are going to be the two big confirmations to me that, okay, we're likely in. I'd say, 30. My guess is like $3,700 kind of says full-blown reversal. But of course, that's quite far away. So we'll take it step by step. But until we were able to get above 3264, I wouldn't be considering buying. And obviously, while we're above 2761, we're seeing extreme divergence on the charts here, which does look as if we do get the reversal, we can start to hold up. But do remember, that is getting less and less likely as we have lost that key level of support, which was going to be our Fibonacci retracement level. I feel like you're talking about so many price levels that when one hits, you feel like a genius, but none of the charts mean anything, in my opinion. Okay, well, let me go ahead and I'll just say what I just said one more time. So, so what I'm saying is that when you start to, let me break it down for you, Michael. So when your price does something like this, okay, and then it starts to come back down, realistically, while you are in an uptrend, the definition of an uptrend, okay, setting higher highs, higher lows. If you see the price come back down below that previous low, that's a bad sign, right? So studying the support levels that get us to that, right? For example, if we know that looking at the Fibonacci, we have a key level of support that says, historically speaking, that your price will hold here. And if it doesn't hold here, it becomes much more likely it revisits its previous level of support. Well, what we know is that we need to hold this level, because if we don't, the likelihood of us coming back down to this level becomes much more likely. And then from that point forward, market conditions worsen as people freak out because we're losing a previous level of support that they mass accumulated at, which typically will cause more of a dump to the downside as you lose that level of support. So now you can start to see a little bit as to why studying these levels are right. And I saying a bunch of prices and saying that when I hit one, I feel like a genius. No, because what am I doing? I'm not saying we're going to hit this or we're going to hit that. No, what I'm saying is that this is the realm of possibilities, right? If we go above this level, we're going up. If we go below this level, we're going down. And when one happens, I say, okay, so this is the bullish scenario is playing out. How do we react? I'm not one of those guys who says, oh, I told you guys it was going to do this. There are those. I'm not one of them. I'm one of the ones who says, this is the realm of possibilities. We have option A, option B. If option A happens, we're going to do this. If option B happens, we're going to do that. And then we start to take on trades. Then we start to make plays. Then we start to do things of that nature. So, yeah. So that's kind of how that's my interpretation of technical analysis. I don't think it predicts the future. I think we study the realm of possibilities. Okay. Just to kind of fight back on your point there. No, we've not talked about mana, but I definitely will get into it. Exactly. TA is just trying to find reasons and patterns, but there is no one answer. Absolutely. And so there are a ton of theories and stuff, but they all relate to the way people think. Exactly. Just the realm of possibilities. Easy. That's all I do, at least. I don't try to tell people what's going to happen. I just study the realm of possibilities. That's it. Let's look at mana, as I know a lot of people were talking about it. Let's go ahead and get into it. We are coming towards the end of the stream here. Looking at mana here. I, of course, can't tell you if you should sell or not, but I would say that while Solana is under $145, it doesn't look good for the short term. But it doesn't, anything can happen at any given point. So mana is in a very peculiar. Okay, I was kind of mispronouncing that. I was about to say peculiar. Very peculiar. God dang it, position right now. Okay, now it's seen pretty massive consolidation, realistically. I mean, it's not doing too much, and I don't necessarily think that's a bad thing. Now, I want to offer you guys a little bit of insight on my opinion about what we're seeing from this, because it's actually relatively impressive of how we're seeing this thing hold up. So looking at mana, the reason why I've not really, been too worried about mana is the fact that that's what I'm going to do, XORs. So looking at mana, for example, one thing we know is that gaming cryptos got dumb extended. I mean, completely overextended. Looking at an RSI reading here of what, 95? Too much. Okay. Too extended. I mean, this was growth of 500, 600% on a multi-$100 million crypto company for the span of like a week. Okay. We saw a similar growth pattern here as we did from things like SafeMoon back whenever it popped. From things like the e-news when they popped, Doge when it popped. But what we're seeing happening at the moment is, although we did see that same level of excitement, there is a difference. And the difference is utility, and the difference is how we're holding up here. See you, dude. So one thing that's exciting me about mana is the fact that though we are consistently downtrending, though we are from the top, down 50%, the fact that in a more long-term perspective, we are seeing the price holding does kind of validate to me the relative, relevancy of things like mana, things like Sandbox, things like gaming cryptos that are going to be applicable within the metaverse. Okay. And so what we can see happening and playing out is that although it's downtrending, we are seeing it holding up quite well, especially in relation to its RSI that shows bullish versus bearish momentum in terms of relative strength. And so the fact that we are seeing it hold up well, I mean, obviously we are seeing some pretty extreme divergences happening right now. It is interesting to see that it is holding up after seeing such growth, because typically if it was something that wasn't useful or relevant or actually applicable to the real world, it would have been way back down here by now. Okay. Once the excitement was gone, the movement was gone, the price is gone. But though we are downtrending, it is holding up well. So it's interesting to see. So personally speaking, I would need to see mana break its downtrend. That while we are seeing a crypto in a very obvious state of a downtrend, which looks like multiple points on a trend line, of course, 3 points to establish a line or a trend line. And the fact that we've established this, it's a very easy answer for me. I won't buy it until it clears a trend line. Like, it's that easy. Okay. Optimally speaking, we don't see the price closing below its lowest recent close, which looks like 2.42, $2.42. But what we can see is that in terms of our Fibonacci's here, we have come down and lost our golden pocket. That says that in the short term, things are more likely to continue downwards than they are to just shoot back upwards. Realm of possibility says it's probably like a 65 to 70% chance we do retrace back to some of these levels and retest these previous lows. Okay, that's just what it is. It is what it is. Now, there's a bunch of other things. What happens if a company brings them on? What happens if there's a big update? What happens if there's a big development? Obviously, all those things happen, and that's why we look for upside confirmations, which looks like the clearing of our trend line. So personally speaking, I want to see it hold above 242. If we lose 242, things do start to look more long-term bearish. You have to start to consider that maybe do we taper out, right? Do we start to look to cut losses? You have to start to consider those things. But as long as we're above that level, I'm not thinking that yet. And if we get above our trend line here, then we start to look for top side confirmations, which looks like, daily Bollinger Band breaks, which looks like us clearing it, which would be great, right? If we see something like this happen, which we break it here, boom, 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 we get back above that 20 SMA, and then we look to continue. If all those things happen, but the first step comes with boom, the trend. Okay, so that's all I'm focused on. This little intersection here, this will happen by February 3rd, so we have about 3 weeks. It will happen, obviously, because there is an apex here of a downward sloping level of resistance and a holding up level of support. Obviously speaking, as long as we don't make a glitch in the matrix, something's going to happen in here. Now, what's interesting is we are seeing a bit of an increase in volume. So it's always something to consider because it kind of has been ramping up the fall there. So that's what I'm looking at for Mana. Really nothing special, nothing too exciting. Simple as that. Okay. All of the exciting technical indicators and everything come in whenever we are more looking at more quick short-term movements. Looking at Matic, of course, did lose its logarithmic progressive growth. Of course, now I told you guys I thought this could happen. Of course, these 3 circles here were actually sales that we made over in the Patreon. You guys know I don't really plug my Patreon that often. I don't want to say I don't want to, but I don't want to just force it onto you guys. Look, but if we're being realistic, my last 3 buys came from the top side of this channel. I saw the establishment of this trend line. I carried it over. And once we touched this one and I realized there was a reversal on the way here, we took profits at level 1, level 2, level 3. We took about 66%, 67% total profits off of Matic from here, off of our buys that ranged all the way from down on these levels. And at this point, it does look like it's logarithmic and exponential growth. Anytime, Michael. Anytime. I'm always down for criticism or anything, dude. I'm not easily ego bruised. But what we can see is that we saw the break to the downside, the closing here, the back test, and a continuation. What that says is that likelihood is that we may continue to the bottom side. Okay. In terms of if I would be buying Matic, what does it look like? It's simple. Whenever we see, again, a very obvious downtrend, that's what I'm looking for. And until we break the downtrend, until we can see ourselves work our way back out from this descending level of resistance, I have no reason in buying. Now, looking at this thing from a weekly perspective, there's something interesting that I did notice about Matic. Let's go ahead and let's get this pulled up. Oh, wait, did I miss it? I'm sorry. Hold on. Oh, I'm sorry. Shorts are up 30% Bitcoin USD. Shorts on trade. Okay, I'll go into that. They're going to have to start covering if they can't get Bitcoin down further. Agreed. And the bears are struggling right now. Remember, bears are struggling. Leverage is up in favor of shorts, meaning that leverage is growing because of the shorts, while our whales are seeing a little bit of exchange movement. Are they getting ready to liquidate them? I don't know. Is there a bullish resolution on the way? I don't know, but it is worth watching. Good call, Luke. Good call. Absolutely, Rob. Yeah. We'll do maybe one of these every now and then for sure. Okay. But let's take a look at what we're seeing. So, one interesting thing that we saw happen is that typically speaking, when we're in an uptrend that is this strong, we don't really see bullish divergences unless it's going to continue. Okay. Now, what's interesting is that we've seen such beautiful growth to the top side. We said a high, and a high. And it's normal, right? Higher highs, looking great, looking cool, looking good, looking gravy. Okay. Possibly, Luke. I don't want to say we will, but it's possible. Okay. And so Michael's lifestyle, I appreciate that, dude. That means a lot, man. I appreciate that a lot. I genuinely do, especially the fact that we can have some like civil back and forth about things like that, and you can kind of see my point. I can see your point. I do appreciate that a lot for sure. That's real. That's love. That's love. So what we're looking at here is the fact that as we have been setting these highs, we've not been seeing overextensive highs. What that means is that we're not seeing the bulls really slowing down yet as we're setting higher highs, but we did see the overbought territory. But what's interesting is that as the price has come back down and we started to pull back a little bit, we can see that our RSI made a very interesting, very swift move to set a lower low right here. Look at this. Look at this. We set the lower low. Now, what's weird about that is that realistically, if the price was going to do that, it would need to fall to about $1.39. So what this tells me is it's another confirmation in the market that says that one of two things is going to happen. And this is going to sound as stupid as it possibly can. We're either going to revisit the lows in which we set back here, or we're going to see very extreme growth to the top side that may look like some type of blow off top, in which we could start to see the bearish divergence forming here, maybe something like this, while we set the higher high that leads to more of a, the harder fall. The fact that we're seeing bullish divergence forming on this retracement right now is very intriguing, because as long as we're above these lows, which are very far out of the picture, we're setting the lower lows. So even if this does continue, and even if we do inch closer and closer into our golden pocket, which we're not even close to yet, let's clear this off real quick, which we're not even close to yet, or we're still above. As long as we're above like 176, it's looking like this could be a big ass setup to the upside, which is always something to consider. So Matic still looks good. I'm definitely going to keep an eye on it. In the short term, again, it is one that I may look to increase my position on now, right? I took profits up here, took profits up here, I took profits up here. And I don't want to say it was exactly here, guys. I think the first one I bought was here. The first profits I took was here. I think the second one was here. And then the third was on the rebound up here, okay? But you guys get it. It was here, here, and here, okay? So what I'm looking for is, do we break trend? Once we break trend, we will start to look for more growth opportunities. I will take on these trades in my Patreon, so check that out if you want. Or I will try to post them as much as I possibly can on YouTube. I just have a limited amount of videos I can post in a day, okay? So, yeah, okay? So there's that. Matic looks interesting. Look how we're setting it even low as we did way to frick back here, dude. As it's crazy to think we're hitting a key level of support on our RSI as we're hitting a key level of support on our price, which looks like our golden pocket. That's a good ass setup to the upside, dude. Be a good eye. Interesting. Muy interesante. What was I doing? I was going over Link. Okay, so looking at Link, dude, Link's a fucking tank, dude. I love Link. I do, like, Link just doesn't even care. Link's like, y'all are going down. I'm gonna talk to y'all when y'all want to come back up, because I ain't got time for that. So what's great about Link is we bought a little bit this summer. I actually ended up selling this whole position back whenever we were towards August, and then I accumulated. Let me see what my last buy on Link was. I think I had a pink line on it. Oh, yeah, my pink lines. Okay. The pink lines, I bought some at 20. I bought some at 23 on this breakout in this back test. And so on those buys on Link, we're still up pretty good, right? I mean, we're up 30% on Link since January 3rd. On that buy and on the back test, we're up still 20%. That's crazy. So right now with Link, my honest, genuine opinion is that I'm personally going to probably start to taper out of it just a little bit. Okay, just my honest opinion. Now, it would be a short-term taper. Okay, it would not even taper my whole position, but take some profits off of it. We're up again 20 and 30% on this thing. The reason being is we are overextended on our RSI. One thing you can see here is that looking at RSI, boom. Boom. And we can see that we have set the lower highs. We have set the higher highs on Link. And realistically, whenever we see the RSI starting to set some of these higher highs, but our price not even getting close, that is usually a sign that we're going to see a pullback. Okay, that's usually a sign that it's getting overextended. Looking at our Bollinger Bands, we are pushing into the top side here. Looking at the rest of the market, it's still in a downtrend. All of these things tell me that we're pumping the brakes as we approach the top side golden pocket. And although we could push towards $30, I'm going to take a little bit of profit. So as this stream ends, I'm going to go probably take like 25% of the profits I've made off of both of these buys just to lock it in. Okay. Long term, I think that Link still has the potential to see these pushes up towards, up towards 30, 40, even $50. I think Link's $100 crypto based off of market cap. I think it has that growth potential. Looking at, let's look at a coin market cap. Little Project Quantum plug there. Looking at Link, right? I mean, it's at a what do we got here? Looking at volume, it's still holding up pretty well. That's always a good thing. But $12 billion market cap, right? I mean, could it 3x from here to a a $36 billion market cap? Looking at something around the XRP levels, yeah, one day it definitely could, right? Looking at Dot, I think it definitely. I think all of these are undervalued up until this point, and I think that Link could see a 3x. I think it could see that growth to 75, even $100 in the future if we do start to see growth in the market. I don't have any reason to believe that. And so the point in which I would start to look to really accumulate on Link again is if the market turns bullish and then we see a break to the top side of this downtrend here. If that happens, then I'm going to definitely look to continue because I think that that's the point in which we do see the large growth towards $70 or so. But personally, until then, I'm going to definitely taper off a little bit as we approach this key level of resistance, just in case we do see this pull back towards the low 20s. Okay, just in case. I just want to lock in some profits while the rest of the market's falling. Are we eating this dip on Bitcoin right now? Feels bullish to me to recover this quickly. You think this can hold or another fake out? No, 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 no. I mean, it's doing pretty damn good, but I don't know. I don't know. Oh my god, Alex, chill. I'm not sure. Looking at the 4-hour charts on Bitcoin, I would need to see it. I'm still looking for 43.5. I don't really know. I'm honestly not sure if this is a fake out or not. I can't really tell. The charts look like it supports it, to be honest, right? We said some of the higher highs, came back in, said some of the higher lows, higher lows on 4-hour charts. We can see bullish divergence forming here on the bottom side. Definitely could be it, but 43.5 would confirm it. I wouldn't be buying Solana under $145 right now. My ETH. That's a steep trend line on Matic. In such cases, do look for a reversal pattern or just buy it when it crosses the trend line with good volumes. Yep. Trend line break, volume increase, any type of divergence is good. Simple moving average crossing, EMA crossings, anything like that. Once I start to get those, what's the word? Confirmations, then I start to get in. Really not too, I'm not too keen on just buying it just because it's down so much. What was I doing? There was one other thing I wanted to look at. There was one other crypto, I believe. Looked at ETH, look at Solana. Maybe not. Maybe I got overwhelmed. Okay. So yeah, let's jump into the chat a little bit here. We're at 1 hour and 26. I'm going to go ahead and wrap this stream on up in 5 minutes. Pretty good stream. I'm very happy with it. I'm glad that I was hopefully you guys were able to learn something. We went over, again, just a quick reminder, if you did just join in, the very beginning of the stream, I gave my full entire thesis of where we're at on Bitcoin, the long term, the short term, the midterm. I gave all of that, so definitely go check that out. We then transferred over there from some of the on-chain metrics. We looked at the crypto fear and greed index. We looked at some divergences that were forming. I then went over into alts, talked about altcoins, their performance in the market, why I'm bullish on them, and went from there into some individual alts, Ethereum, the Solanas, our ADAs. So definitely do go rewind, check that out. Thank you so much. Did you do Luna? I have not done Luna. My opinion on Luna is that I'm letting it continue to fall. Okay. I'm not even remotely looking to buy Luna right now. Personally, it did grow, which was beautiful. I love the growth that we saw from Luna, but I do believe that it got extended, and I am under the belief it needs to calm its ass down a little bit. Okay. We'll see. What I'm looking for from Luna, if I would be, go to take on another trade on it, is if it breaks a 20 SMA, which is around 84. Okay, because it's historically throughout this whole run to the top side, breaks, goes to the top, right? Breaks, top side extension, breaks, top side extension. So I'm looking for a break into a top side extension towards $100, which could look like a little bit of a trade of somewhere around 20% or so, but right now it's definitely. I have a feeling Luna might start to do this, where the 20 SMA does this and it bounces off of it, and it may start to resort to some of these levels that it needs to. I mean, it's overextended. Okay, so, but what we can see is that if it does start to reverse, and we do see that clearing, right? Again, look at another case of this divergence. I mean, it's so much bullish divergence right now where we're fighting the trend and the price of cryptos are fighting against the downward level, which also says that the bears are trying their asses off to push this price down and they're not having success. Sick. I like what we're seeing, but I need to see the clearing. Okay. Because right now it's not showing me that that's what's happening yet. I don't want to spread hopium. So no. Okay. Okay, best buy at the moment. Your opinion? Ethereum, probably. To be honest, I think that Ethereum is going to reach $6,000 one day, and I'm genuinely confident in that. No matter what it does, I think it's going to hit 6K. I released a full thesis a while back of why $6,000 is going to happen. That's a doubling from here, and this is the one that's the most likely, the altcoin that is the most likely to still be around in a year. So when you're looking at a possibility to 2x your money, as well as be able to anchor your portfolio, and likelihood is you won't see, I mean, there's always possibility of loss, but I don't see anything more than like a 50% loss from this point or something. I mean, 1,500 is possible, but I don't think we're going to lose those summer levels. I would say Ethereum is the best bet. I would definitely say Ethereum is the best bet right now. That's the one I am looking to grow, to buy. No, I mean, Ethereum's always going to be limited until ETH 2.0 comes out, but I'm happy with that because, I mean, that's good for Matic shit. I mean, that gives Matic even further time to grow. Um, that's just my opinion. Luna, Matic, Power Ledger. Interesting. Okay. Have you checked Phantom today? I have not. Looking at Phantom saw growth. I was very adamant that I thought Phantom was moving a bit quick against the market. And so, personally speaking, what I would say for Phantom is that it just realistically needs. I don't know. Personally, what I would like to see is how do we close this day? Tomorrow, the next update we'll go over it. I need to see how, because we have this possibility. If we close, we could see this closing divergence here, which could lead to the continuation. We did see a pretty nice little retracement. This looks like a 382 to 0.5 retracement. Yeah, 382 to 0.5 retracement. We're sitting in this in the yellow box now, not the green one, but the yellow one. So if we hold here and continue up, if we go back up to above $2.57, likelihood is if we clear above, close above 257, likelihood is it does continue. But at the moment, it seems like it needs to retrace after such great growth, and I think that's super necessary. One cause of concern with this one is the idea of it being some type of dead cat bounce, because we did retrace back. We did retrace back to our Fibonacci's level, and then we continued to the downside. So that's always something to consider. Okay, that is definitely a cause of concern. It's not something I'm concerned about just yet, but it is a cause of concern. But what's cool is that we do now have 2 points. So we can have something of a half trend. Again, a trend is defined by 3 points, in my opinion. But once you have 2, you can kind of start to get ideas. So, yeah, that's that. Woo, okay. And type of money, is crypto worth investing $1,000 into? What's your goal? I mean, if you're looking for long term, yeah, I mean, I definitely would say so. If you're looking for short term gains and that's money you absolutely cannot lose, right now it's probably pretty goddamn risky. Yeah, definitely possible, which validates the idea that this could have been a dead cat bounce. Like if we bounce here, boom, that shit's coming down probably. I talked about ADA about 15 minutes ago. Yeah, I talked about ADA about 15 minutes ago, guys. I don't think ADA is trash now. I just don't think that they are living up to the things that they promised, and that until they start to perform, they are not going to see any type of results. But I think they will perform eventually, and that'll lead to growth. Yeah, agreed with that for sure. 30 G's. I mean, it kind of all depends. Solana alive? Yeah, it's definitely alive. It's just ugly, kind of like myself. But yeah, so with that being said, guys, that's going to be about it for today's stream. Of course, we're at about an hour and 32 minutes. I don't want to make this too long, especially for those of you who are rewatching it, who have shit to do. I don't want to keep you up all day. So with that being said, again, I hope you guys do enjoy these streams. We did a live stream last week. You guys seem to really enjoy it. So, of course, if that's something you want me to continue to do, definitely let me know. Guys, if you do want to go ahead and check some things out, hold on, give me 1 second. Let me get this pulled up for you real quick. Again, I don't like doing all the plugging things, but at the end of the day, it could be beneficial to some of you. So here we go. Boom, boom, boom. Remember, guys, I do have a Patreon. We have 370 images, 204 videos, 10 links, 8 posts. I mean, I'm active in that thing, okay? And so if this is something you'd be interested in, if you want to go ahead and check it out, we do have some spots open up right now. We have one bronze spot, which is $8 a month. We have some $13 a month spots. We're going to do some giveaways pretty soon. I'm going to give away 5 spots for bronze members. We're currently sitting at, we have about 1,400 exclusive posts. There's about 500 people in the community right now. It's definitely a great community. Not everyone's active, but everyone's paying attention. And we do a lot of learning. You guys do get access to a masterclass. So what I'm doing right now is I'm actually currently working on a masterclass where I'm going to do 10 to 15 minute videos on candlesticks, Fibonacci's, Bollinger Bands, VPVR, all that good stuff. I'm going to do a full-blown masterclass for all of the silver members. They're going to get 1 to 2 every single week. For maybe about 4, 5, 6 weeks, in which they'll be able to then access at any given point. Bronze members, of course, also get access to the trades, the live streams, all that good stuff. Gold members, platinum, diamond, go check that out. Let me know what you think. So overall, that's what I do, guys. If you don't want to join, don't join. If you're not sure if it's worth the money, don't join, okay? I'm going to do as many live streams on here as I possibly can, while also providing the content that is exclusive as well. And so if you want live streams and that's all you want, look, I'll be on here once a week, maybe twice a week. So just catch it there. But if you do want extra info, that is available. I'm not going to push it down your face. Check it out if you want. If not, it's totally okay. One thing you should check out, though, is FTX. Sponsor the channel. My favorite sponsor. I'm happy about them. Check out FTX. But overall, guys, that is going to be about it. I may do one more live stream on the public channel this time this week if something crazy does happen. So do stay tuned. Pay attention to these levels. They are extremely important. And please remember, guys, I'm not a fortune teller. I'm not a psychic. I'm not an expert, okay? A lot of people on here claim to be experts. I'm just a dude who's been in crypto for a freaking long time. He's been through the ups. I've been through the downs. I've made a lot. I've lost a lot, okay? I've made hundreds of thousands of dollars. I've lost hundreds of thousands of dollars. And that just is what it is, okay? And so my whole goal here is to offer you insight of what I think is possible and how we validate those possibilities. That's my only goal. That's all I'm going to try to do. And there's no other incentives there. So definitely, if you do like the content, if it is something that you would like to see again, I would appreciate it. Subscribe. But hopefully, since you watched the stream, I will pop up in your recommendations and I'll get that sub from you one day. So with that being said, again, guys, that is going to be about it for today's video. I hope you guys did enjoy. And of course, if you did, you can let me know by smashing that like button and subscribing to the channel if you are new. And I'll see you all next time.